So today I just thought about talking about something that I've seen mentioned quite a bit, which is this 2023 stock market crash, and people talking about selling all your stocks before entering this stock market crash. So I'll give my thoughts on this, and as we wait for this inflation data to tomorrow, which you can see in the market right now, everyone's just kind of going, we'll just see what tomorrow brings, and without doubt we'll probably talk about that inflation data when it comes out tomorrow on the US side of it. But I thought, while we're waiting for that today, let's just talk about this. Let's talk about the stock market crash 2023, if that could potentially happen, and if it's time to sell all of your stocks right now. Now, in my opinion, if you were to sell all your stocks right now because you think a 2023 stock market crash is coming, you are going to be making a terrible mistake. Now, that's not me saying that potentially we are going to have a fantastic 2023 market, but the risk of trying to time the market and without doubt, thinking that there's definitely going to be a terrible 2023 is a very risky play to be doing, in my opinion. So first of all, the S&P 500. This is supposed to be my S&P 500. I've tried to copy the S&P 500 as best as I can, hand drawing it. So hopefully I've done okay. We'll see what you think. And we can see here, we had a big run up into 2020. And then we had the CV dip. We went all the way up. We had a fantastic run at the end of 2021, 2022, and in 2022 we've just been going lower and lower. We had a bit of a bounce. We went even lower, and now we're just having a little bit of a bounce up again right now, and that's where we're at. But overall, the S&P has had a pretty bad 2022, and that's being priced into the stock market right now. There's obviously a negativity that's priced in, but what a lot of people are saying is that what's going to happen is stocks are going to carry on going lower down here, or could stocks actually flatline, or could they actually go higher? And that's the big thing. Sell now, it's going lower. We don't know. We generally don't know. 12 months to this day, when we look at 12 months on this day in 2023, where will the S&P be? If I asked everyone in the comment section to guess where they think the S&P will be 12 months to this date, I tell you, I would probably say nobody would get the price exactly spot on. That is how hard it is to predict. No one can predict the stock market where it will be in the next 12 months' time. It's impossible. You ask the greatest investors of all time, even they would be like, I don't know. Even half of them would get it wrong where the stock market will be in 12 months' time. It's impossible to tell. If you went 12 months ago over here, if you asked here, where will people think the stock market will be? I'm sure plenty of people said, obviously it's just going to carry on going on an uptrend. Who would have been able to predict that Russia was going to invade Ukraine? Who would have predicted oil would go absolutely crazy? Who would have predicted inflation was going to go skyrocketing? It was a hard combination of factors to predict why we had such a bad stock market. And it's in the next 12 months. We have no idea. We have no idea where inflation is going to play out in the next 12 months. We have no idea where the Fed's going to be in 12 months. It's impossible to tell. It's exactly around this CV situation when we had a big massive dip. Who would have thought we would have been at all-time highs? Imagine if you asked people in that pandemic, where do you think the stock market's going to be in 12 months' time? Everyone would have gone, yeah, it's probably not going to be doing that well. The pandemic's still going to be around. And, we were skyrocketing at all-time highs, which is absolutely crazy. So, history tells us, the greatest investors of all time tells us, evidence from the last 12 months or the last 24 months tells us, we cannot predict where the stock market's going to be in 12 months. So selling your stocks right now is all your stocks right now is a massive mistake, because what happens if it's higher? We don't know if it's going to be higher. If it's going to be lower, we don't know if it's going to be lower. Now, you can make educated guesses about potentially what's going to do quite well, what's going to do, not so well. But if you were to sell all your stocks, that would be an absolute massive error in the next 12 months, because what happens if we have an absolutely fantastic 12 months from here? You're going to totally miss out, and in fact you'll be very much near the lows as well. The next thing is, stop losses. I see quite often, especially in the 12 months. One of the big things that bears have been pushing is selling all these stocks now. But one big thing that I've seen building up in the background is like stop losses. Stop losses as a long-term investor is the most pointless thing I have ever seen. It's absolutely irrelevant. As if you're trying to day trade, potentially you might try and day trading is another thing that I don't think you should be doing. But, even in day trading, potentially you might use stop losses there. But as long-term investing, stop losses, that's absolutely bonkers. Stocks will bounce around all the time. Whereabouts do you set your stop losses? Do you set it when it goes 5% down, 10% down, 20% down, 30% down? it doesn't make sense, because quite often what happens if you own a stock and you put a stop loss for like 10% lower, it goes to 10% lower, you sell all your position, and that's the bottom, and it starts going on a good run there. It's absolutely pointless having stop losses as long-term investors. So yeah, I've seen that argument put forward quite a bit in the last 12 months, and it's like, if you're seriously long-term investors, stop losses, you do not want to be using them, because the stocks are going to be absolutely volatile. And if anything, if you're a long-term investor, if you do take losses, or if your stocks do go down, if you really believe in that stock, you want to be dollar cost averaging into that position. The more it goes lower and lower, if you really love that stock, you should be buying it. There's so many cases, this year where you look at the stocks and you're like, it keeps going down, but I'm going to buy it because in the long run, this is going to be an absolutely fantastic opportunity. If anything, as a long-term investor, you want to be averaging into them positions, because if you love a stock at $10 and it goes down to $5, why don't you love it even more? You're getting that stock at a cheaper price, and whatever you think the price is going to be, your upside is even more higher than where it was, because you're getting a lower average. So you love stocks to go low. This is what blows my mind when people say, oh, the so-and-so stock's down 20, 30%. It's a terrible stock. Well, not as long as you're still happy to hold the stock. If your stock's still going where you think it's going to go, you're going to be loving a 20, 30% sale on that stock. I remember, buying into a stock like Hims, for example, this year, and I was buying it $6, $7, and then it went down to $3. It went down 50%. I didn't look at that and go, oh, it's a terrible stock, I'm down 50%. I was like, right, you give me that stock at $3, I'm buying it at $3. And I think that stock will go on to do crazy things. And I think if you got a lower price on that stock, I think you're going to be absolutely laughing. So rather than stop loss as a long-term investor, you want to be dollar cost averaging, 100% sure. And the next thing is, does 12 months matter? As a long-term investor, seriously, does the next 12 months really matter where the stock market's going to be? No. As long as you're a proper long-term investor, you're looking where that business is going to go into the next 5 years. Because in the next 5 years, that's where you'll get a lot better consensus of where that company should be. By then, you should see profit growth. You should see revenue growth. The chance of a recession, a slow 12 months, a poor 12 months in the stock market, that can be priced in over a longer term time period. And over the longer term period, that should balance out where you're actually starting to see fundamental growth, financial growth. It should be rewarded on the share price, and it would be very rare to look over like a 5-year period and go, we've had a 5-year bear market. I mean, it could happen, but over the more longer term you go, the safer it is for you. A long-term horizon should give you the rewards if a company is financially performing. We've seen in the last 12 months how many stocks have been financially improving, but because it's a bear market, the stock's getting dragged down. We've seen so many. There's so many stocks at the moment that's having that. And that's why, as a long-term investor, really, you shouldn't base things off of 12 months. If there's going to be a crash in 12 months, if stocks are going to go lower in 12 months, you want to be looking at a long-term horizon. Because as a long-term investor, long-term horizons are your best friend. Because over the long term, things will balance out. In the short term, things can happen. You can have, stock market crashes, recession, negativity, times where the stock market isn't fairly reflecting stocks. But over the longer term, it should all balance it out. And this is why right now at 2023, you can't guess where the stock market's going to go in 2023. It could be higher, it could be lower, it could be flat. But even then, even the fact that we don't know where it's going to be, you should not be basing your investing principles of, could the stock market be a terrible 2023? You don't want to be doing that. That's not a long-term investor. Long-term investor is not going, where will this stock be at the end of 2023? As a long-term investor, you want to be working out, okay, where's this stock actually going to be in the longer term when the fundamental or the bull thesis I have around it develops and they execute over the next few years. That's where you should be basing it off, and that's where you'll get a proper return on an investment. So yeah, that's my thoughts on it anyway. Just a few things that I wanted to throw at you out there today, and just talk about a few things that I've seen, a few things that I was just being like, absolutely crazy there, to be thinking that sort of way. So hopefully this helps, and we'll see where the inflation data balances out tomorrow anyway. So hope you enjoyed the video anyway, guys. Hope you enjoyed me kind of just muttering on for a bit, and smash that like button and see you later.